for the hour, Lloyd Financial Group President and CEO Lloyd. The president, not part of the strategy. Let's put it that way.
That's exactly right. I'm glad China hasn't read Art of the Deal, because that's exactly what's happening here with our leverage with Trump. And I think this is not Trump's not trying to destroy China like we talked about. He's trying to remind them who built China. The United States did in 2000 when we basically lifted the permanent normal trade relations that got them into the WTO in 2001, which obviously we benefited from. Look, we need China in some capacities. They really need us in a lot of capacity. And this is bigger than just tariffs and bigger than just talking about trade revenue, talking about trade deficits. I mean, there is a $300 billion deficit as of last year. If you remember, the dollar index this year is really down. The dollar has declined a lot. So there's been a lot of chatter over the past year of other nations dumping the U.S. currency and trying to maybe use other currencies, which is kind of devaluing the dollar in some ways. I think it's actually a bigger picture here with Trump trying to land a negotiation, a deal that's going to benefit more money flowing into the United States, with China actually buying maybe even more of our treasuries. Because when we flatten the deficit of $300 billion, let's say we get that to zero, that's $300 billion more dollars a year that's basically having to be repriced in U.S. dollars. That means more money coming into U.S. treasuries, which is driving down interest rates. And that's one of the biggest things the Trump, administration wants for middle-class America is to get interest rates lower. And that inherently actually benefits the market in a lot of ways, especially those smaller cap, smaller names, those tech stocks that are borrowing money to grow. And I think that's what kind of the market's doing with the breadth widening in a lot of ways. And liquidity remaining strong. And that liquidity remaining strong is going to be very bullish for all asset classes. So that's what's happening.
Trump wants lower
we can just monetize the debt, right, with the Federal Reserve.
Well, the biggest thing is keeping the dollar strong, though, because, I mean, one of the biggest fears in my future, if I'm looking for my 40 years, 50-year time horizon, my future kids, we have to maintain the strength of the dollar. Right now, 88% of international transactions is the U.S. dollar. So my point is there, I think that the biggest thing is we need to maintain that strength of the dollar. And one of the ways to do that is to make sure that we are forcing international money to us, whether it's China or other countries. I know they're trying to force their hand in the wall in other countries.
Nope, Larry.
When they hiccup, there are a lot of companies that lose a lot of business and a lot of time on.
It's similar to CrowdStrike when the less than $100 billion company went down, how connected the airlines were. It's crazy how interconnected we are, and Amazon's been a laggard for years, or this year at least. So I think that's going to continue to be the case.
All right.
As much as I think that virtually every asset class is in a bubble overcome with a mania, makes me want to believe it's the opposite. Because when you have people saying and thinking one thing at the same time, they're usually wrong on Wall Street.
You're exactly right with that. But it's not a bubble until it bursts. I mean, that's why I hate talking about bubbles, because bubbles can last years upon years and upon years. And I think last week is actually kind of interesting with the banking news we heard around some issues. I draw a lot of parallels to liquidity in the system back in 2006 to now. And back then it was a banking issue. I think the issue actually, and this is a macro, goes down to the AI story. It comes from the private equity world. Private equity has, with lower interest rates, with the money being cheap, there's been so much private equity money that's come into AI and technology, and it's been fueled by this low interest debt. As interest rates go higher, that liquidity starts to come out of the system. I think that will cause some issues. But look, I go back to my grandfather when I was like 7, 8 years old, maybe 5 years old, sitting on his lap playing on my computer. He was so surprised about what I could do on my computer and all the crazy things. And I don't think, not to bring age always into it and stuff, but because most of my clients are in their 60s, 70s, and 80s, there's a bunch of people that don't understand this AI is here to stay. This is revolutionary technology, and it's going to completely, in my opinion, revamp the future, and we can't even fathom what's about to come. But when it comes to the AI story, the liquidity is still remaining strong. I think the 2006 to 2008 parallels are there. I'm looking probably in about 2 to 3 years, maybe even sooner than that a little bit, of maybe that bubble bursting in some areas. I've had people I've been talking to that have 3 stocks, Palantir, NVIDIA, and Microsoft, millions of dollars in those 3 stocks, retail traders, do-it-yourselfers, and they think they can't lose. That obviously is going to end eventually, and that scares the heck out of me. But like when you have stocks, like one of the stocks we bought a month and a half ago, AST Space Mobile, a $35 billion company that basically has no revenue. We bought it because of the liquidity in the system. That stock's doubled in less than a month for us. We still own that because until the liquidity comes out of the system, the speculative areas are going to do well. So you have to partake until that bubble does burst. And the way you figure that out is you track liquidity in the system.
I'm going to jump on that too.
Yeah, liquidity can come out of the system like
It could,
overnight.
and that's why we track it every single day. We have Z-Sports statistics.
But by the time you're
Bumper car yourself with padding the best that you can.
And you don't have to have 100% of your money in the AI theme. So the way we're doing it right now is we have 20% roughly of our portfolios in the highly growth liquidity names. So today when GitLab, Circle, Bullish, 3 stocks we own are up 5 or 6% today, that 20% really delivers alpha. Obviously it works against you too when you have down days, but you can protect your portfolio with the other 80% with more of this value kind of safer names. So that's kind of how we're approaching it, but we're happy risking 20% to capture those higher growth days.
Or pets.com or something like that.
And the difference is the systems learn the playbook. Governments have learned to bail things out. Governments have learned to cut rates very quickly. The playbook's different now than it's been for
do we want
decades.
to celebrate the bailouts?
I don't for the long term, but
I don't know.
all that does is separate the rich from the poor, and the wealth divide continues to happen. So those that own assets tend to do well. Most people say socialism is a bad thing. I agree for the long term, but it's not bad for those that own assets because if you look to history, all of that kind of transition to bailouts, money in the system, deficit spending only benefits the rich. And you either are the rich or you're not. That's kind of how I think about that. I would say that could have been the case for a decade or 15 years now, since 2008, 2009, when we lowered rates back down to 0%. The cheap money has fueled this bubble, and whether it's now or whether it was a couple of years ago, whether it's 2 years down the road, it bursts.
No,
But
I
again,
didn't think that there was I did not use the B word 3 years ago.
You're looking at news like this and saying, maybe Apple's got a little more of its mojo than we think.
I'm starting to, because I've been outspoken on your show before, I think. I've not been in love with Apple for a while, and I think that was probably a wrong decision for a little bit. I'm starting to get a little bit more excited, and I'll tell you why. I bought my phone, the Galaxy. I will admit I don't have an iPhone. I bought it like a year ago. I noticed today it's moving super slow. Like it's like not moving around very quickly, and I think it's the software updates in the AI side of the equation. AI is requiring so much compute for these phones, you need almost a new phone every single year. So I think that's actually a bullish case for iPhone sales, is how much compute and demand there is for AI applications on your phone.
That's just because my negative aura is interfering with your phone.
Not you, Dagan, not you.
There's a magnetic field coming out from this side of the panel. Okay.
That's what I was about to say. Me and Brianna, I think, were the first test subjects with the brain, with the internet and technology. I mean, the Gen Zs and millennials, I'm running the cutoff between millennial and Gen Z. Technically, I'm a Gen Z. I actually sent a video to my wife yesterday talking about the good old days, those 90s babies, what we remember compared to kind of 5 or 6 years after living. The days of smelling the grass and hearing the owls chirp. Those days don't seem to exist anymore because our dopamine brains of the internet. So the AI is going to take that even further. What I'll quickly say from an economic standpoint, though, you either learn to use AI as a kid. My mom's an English teacher. She's like, I hate AI because all these kids are using ChatGPT and all that fun stuff. Well, okay, I get that. There's a time and place you got to think for yourself. But if you don't learn how to use AI as a kid, though, you're going to be left behind because the future is going to be AI. There's no stopping it at this point. Just like the internet. The internet was the future, and there was no stopping that.
Created from whole AI cloth.
So it's like a credibility killer.
Right. So just dump it. Dump all of it. Start over again. And I can't wait for that to happen.
There's a term for that. The younger generations say it's called brain rot. There's just a ton of brain rot going on.
I don't think the younger generation came up with the term brain rot.
Well, they're using it, though.
Have there been different brain rots?
No, it's not brain rot. It is just uselessness. It is, I'm not going to be duped. I'm not going to be
why
your
would I want
mark.
to look at that? Agreed. And maybe they do need to be taken down in that way. Luke, thank you for being here. Good to see you coming up.
appreciate it.
President Trump